Jared, we appreciate your ongoing transparency off the back of a huge effort to deliver a $1.9 trillion plan. Let's start with this, how unique this moment is and why a unique approach is required.
Yeah, it's a great question. The American Rescue Plan, which we expect to pass the Congress any moment now, is certainly one of the most consequential and one of the most progressive pieces of legislation in recent or even distant American history. We're talking about getting $1,400 in checks out to almost 160 million American families, and those checks start going out the door days after signage. In fact, speaking of deadlines, in just a few days, about 11 million Americans risk the potential of losing enhanced unemployment benefits if we don't extend them, which is, of course, at the heart of the American Rescue Plan. And then there's, of course, the crucial issue of finally gaining control of this virus, producing, distributing the vaccine, getting shots in arms so we can get to the other side of this crisis and launch a robust, reliable, and inclusive recovery.
The shock is different, yet we have been conditioned by the previous cycle, and the lessons learned from the previous cycle are being applied to this one. Now, Jared, that's something I'm struggling with. We've been conditioned by the previous cycle that we need to do more because the recovery was so shallow. If the shock is different, why are the lessons that we've learned previously pertinent to this one?
I think the critical lesson there is the one you've said, and I don't think that, if anything, the magnitude of the shock would really emphasize that lesson, which is that our tendency has been to do too little, not to do too much. You know, when I came up in this business, there was no such thing as a jobless recovery. You had these more V-shaped dynamics, and, you know, a bunch of folks were furloughed from the factory, the shock went into the rearview mirror, and a bunch of folks came back. Now we've had these sluggish, jobless recoveries that often set up an expansion that underperforms. That's not the way Joe Biden wants to see his administration get out of the gate. And with the American Rescue Plan behind us, we think, again, especially with finally getting this virus behind us, is so critical to launching not a wait and see, not an on again, off again kind of recovery, but a reliable recovery that can be durable.
Dr. Bernstein, good morning. Thrilled to have you with us today. You did a frontline interview in the heat of the financial crisis talking about you guys inheriting a recession. Your critics will say you are manufacturing a boom economy with this stimulus, and they will then go on to say you are manufacturing new, higher inflation. Defend the administration.
Sure. Well, first of all, I don't hear too many of those voices outside of partisan Republicans. Even some economists who've been worrying about overheating and critical of the magnitude of the package have recognized the support, recognize and support the importance of rescue and relief. But let's talk about your inflation question. I want to tell you about the 3 S's. Okay, you ready for the 3 S's? Spending, slack, and savings. So, spending, by which I mean spend out. The spend out of the American Rescue Plan does not occur in 1 month or 2 months. It is true, and it's very important, that the checks and the unemployment insurance, the enhanced benefits, get out very quickly, right out the door. But the plan itself spends out over a couple of years. So some of the folks on kind of the overheating team don't recognize the spend out pattern. And then there's slack, okay? There is still way more slack in this labor market, Tom, than I think your question implied. We have an unemployment rate for African Americans of 9.9%, 8.5% for Hispanics, 9.5 million jobs in the hole still. That's deeper than the deepest part of the Great Recession. And then, of course, savings, the other S. Some of these benefits, some of these parts of the American Rescue Plan will be, at least initially, saved by people who will then use it to meet accumulated debt, say from rents and mortgage forbearance.
Okay.
And that, too, puts downward pressure on price pressures.
But, Jared, we've had a number of economists come on and say that that was actually perhaps a bit overstated, that actually consumers are not as indebted as they have been in the past. So there isn't as much debt to pay down. That is one argument. But there's another argument saying, yes, the depth of this crisis was deeper in some ways than the last crisis, but it was very different, and the bounce back has been much faster than economists are predicting. What makes you confident that that isn't a sign that we're going to get some sort of growth that was going to be turbocharged, and the inflation also with it, that will be a very different picture than what we've seen in the past 10 years?
Yeah, well, first of all, let me talk about the debt issue. And for that, you might want to consult with our good friend, Mark Zandi, who's been tracking a very specific type of debt, which is the type I've had in mind. And that's for people who've been benefiting from rent moratoriums and mortgage forbearance. This type of debt is, I think, quite escalated right now. And it's precisely the type of debt, and there's some evidence for this, that folks are using these benefits to spend down. You know, eviction risk is still upon the land. And the American Rescue Plan addresses that head on. Now, you talked about the pace of the recovery. Every forecast I've seen has a couple of things common to it. One is that we will grow above trend this year and next year, and that is precisely the kind of growth rates that the American Rescue Plan is supposed to set off, again, in a reliable sense, because we finally put the virus behind us, we've safely opened schools, we've gotten families and businesses the relief they need.
Yep.
But these forecasts also show heat, yes, heat in terms of interest and inflation rates, but not overheat, and I think that's the key.
Jared, before we let you go in about 30 seconds, if you can, something you've been fighting for a long, long time will not be in this bill that goes through the House today. It's a higher minimum wage. What's the administration's message to progressive members of the House who didn't get what they want either?
President Biden was disappointed by the ruling of the Senate parliamentarian to keep this out of the bill. However, that doesn't mean he's at all putting this fight behind him. And in fact, he continues to be extremely committed. I got an email this morning to that effect, and I won't divulge what it said, but I will say that the administration remains.
Feel free.
The administration, our administration remains absolutely committed to finding a path forward on a $15 minimum wage, and that's going to be work that you'll hear a lot more about going forward.